All right, we are live for this week's market update. Hope you're having a great week. Lots to unpack this week, but really what I'm hearing in the media right now is that there's a lot of property owners putting their house up for sale. So a lot of new listings flooding the markets at the moment as well. And there's a number of reasons that the REA Group's recent survey indicated as to why people have been putting off selling. And the highest reason is because of the market uncertainty at 36%. Following that, 25% of people have decided just no longer to move, and about 24% of vendors have had unrealistic price expectations and therefore decided not to sell as well. But overall, the consensus seems to be saying that there is an unseasonably high amount of new properties coming to the market. And that's true in some parts of Australia, but not across the board. So if we look at the likes of Sydney, Melbourne, Hobart, Canberra, there certainly has been a flood of new listings coming to the markets there, and higher than the averages as reported by both REA Group and CoreLogic as well. There's been a fairly huge spike in new listings in those particular areas. But across the rest of the country, the statistics are not the same. And if you look at the combined capital cities across Australia, at the moment, they're reporting an increase in new listings of 1.5% year on year. So that's 1.5% increase in the amount of new listings coming to the market across those combined capital cities. However, what we're seeing is those markets in Sydney, Melbourne and Canberra, they're skewing those numbers for the likes of Brisbane and Perth. And in those particular areas, there is an absolute record low number of properties on the market for sale. So if you look at the charts that I provided in this week's blog, and again, all the details of what I'm saying here is in that blog, including a few charts by both CoreLogic and the REA Group that highlight where new listings are at. So if you look at new listings in Brisbane, for example, I think they're down quite a bit compared to this time last year. So I'm just pulling up the figures here now. So if you look at new listings in Brisbane, 5.7% down compared to the 5-year average, and 9.7% down this time last year. Now, I don't have particular numbers up here for the Sunshine Coast, but I believe it would be fairly consistent with those numbers down there, maybe even a little bit tighter than that as well. And if you look at the total picture, so the total amount of listings on the market, and this is quite significant in my opinion, for the 5-year average, we are down 40%, the amount of total listings available on the market for sale, and down 23% on this time last year. So that's a huge shortage in the amount of properties on the market for sale. Now, you've heard me talk in previous weeks, blogs and vlogs, that the amount of buyer demand out there right now is building. There's so many people out there looking to purchase a new home. I speak to buyers every day and they're showing me frustration that they just can't find a suitable home, or they're finding homes, but their price expectations are just well above what they think is fair value. And I think that's something to keep in mind. If you're a seller entering this market, the prices have now steadied. I don't think we're going to see any further falls in prices. That's just my opinion. If anything, we're going to see prices rise, but we're not going to see a significant booming market like we did in the last couple of years. So keeping that in mind, buyers are still showing caution. Yes, we have seen interest rates peak, or nearing their peak anyway. There might be one more hike yet, but pretty much we've seen them peak, so we're not going to see interest rates climb too high, but buyers still have an interest rate to keep in mind and what that means that they can afford. So prices aren't going to climb considerably like we've seen, and I don't think they're going to fall. Now, there's some people saying that if we see a flood of new listings hit the market, combined with this fixed rate cliff that they're talking about, a lot of people coming off their fixed rate loans, and causing maybe some distressed sales. So new listings, distressed sales, might give buyers more choice, more room to negotiate, and therefore might pull those prices down slightly as well. That's what some might suggest. I don't agree with that. I think there is a huge amount of pent-up demand right now. Buyers have been holding off or not being able to find suitable properties, and there's a population growth surge, immigration growth surge. There's a lack of available land, new home and land availability across Australia as well. So all that combined, I think we're going to see, even if a bunch of new properties come to the market, that buyer demand will suck that up. So I don't see there being a problem going forward. This week I've also included a forecast for property prices by PropTrack. which is included there as well. Now they're suggesting a 3 to 5% growth in property prices this year, which we've already really seen so far throughout 2023. And then they're suggesting a 0 to 3% rise next year as well. I'm actually a little bit more confident in that. I think the prices might go up a little bit further than that next year, maybe even between 5 and 10%. But it really depends on what the interest rates do and the population growth and all those things. So hard to know exactly what's going on out there. But that's my report this week, guys. Check it out at martinlutzy.com.au. All my blogs go up there. You can check out all the information about current properties there as well. And anything we can help you with, always get in touch. We'd love to speak to you. And I hope you have a great week going forward.